Hi everyone, my name's Tim Fairweather. I'm an Aussie day trader, and in this video, I'm going to show you a daily practice drill that you can do that's going to help your live trading. This is something I do every day, and at first it might take a little bit of time to learn, but if you get in the habit of doing it, it's going to put you in situations in a simulated environment that's going to help you to make decisions, or at least I believe it's going to help you make decisions more easily in a live environment. So let's go. So this exercise I call unluckiest trader in the world. Now, for someone that's a really good trader, this will be a difficult exercise. But for someone who was once a very bad trader, it's really easy. How do you do this exercise? Well, everyone goes through the chart in hindsight and puts little arrows on all the good places to buy and sell. So selling here, probably selling here, sell the pullback. But what no one seems to do is take all the bad sells and all the bad buys. So what we're going to do is we're going to get rid of all the obvious ones, and we're going to play a game where we imagine we took the worst sell. So down here, someone sold one tick below that bear bar. You can't sell one tick below this bear bar because price didn't go there, but someone is short there. Now, I call this the lowest low one, and I use this in my live trading because I want to see who's stuck. So that's the worst sell today. Now, there were no buy signals that you could have bought one tick above, and that's going to be my definition for this drill. It has to be a buy that can be bought one tick above the high of a bar, or a sell that can be sold one tick below the low of a prior bar. So that means that was a sell, that was a sell. Now, for newer traders or experienced traders, we've all had days where we've done this. If you're a professional trader, you're not going to have many of those days. If you're a newer trader, you're probably going to have a lot of those days, but that's okay. The key is to realize when you are doing the wrong thing early so that you can change your behavior. So phase one, I've got my chart with all the unlucky trades. Why do I use the word unlucky? Well, it's not really about what we know. It's a live trading environment. And that means sometimes we're going to do dumb stuff. I mean, I'm a trader. I do dumb stuff. I just do more non-dumb stuff. So let's look at this. In TradingView, which is a free program, by the way, in Market Replay, I can now see all the signals. In your program, you don't have to do it this way. So let's imagine I sold there. I'm in the micro E-mini contract because I know that the volatility was really high. And so I don't think a lot of traders would have been trading, well, certainly newer traders, I don't think would have been trading a lot of E-minis. So what I'm going to do here is, let's imagine we're selling the close of that bar. A limitation of TradingView is that I can't sell one tick below the low of that bar. I can't use any limit orders. I can only buy the close and sell the close, but that's okay. For the purpose of this drill, that's what my trade looks like. So I get triggered in, I'm happy. It's a bear bar, and then I get a bull inside bar. So at this point, I'm thinking to myself, well, I'm far from the moving average. I'm in a bear spike. I'm in a bear channel. I think I've got good odds of it going down. As this bar closes, I need to make a decision very quickly. The best decision, I think, for a beginner is to look at the high of this bar, which is 425.25, and place my stop one tick above that bar. But my stop was up there. Why would I not just rely on my stop? Well, you've sold below the low of something, and now there's a buy signal. There's a credible low of the day. So the best choice, I think, is to get out. So you take a loss. So we draw a line there. So now you've got a line where they sold. This is forming what I call a graveyard, or as I used to call, just my past trades. So best to get out after that bar. You can talk about management in a different exercise. This is about unluckiest trader. So I finally decided to sell all the way down the bottom, and then I take a loss. And that was my experience of trading. So we immediately break out. We run that stop. And now I've got another sell signal. So what do I do as an unlucky trader? I think, darn, I just blew a short position there. Let's have another go. I'm going to sell one tick below the low of that bar. Now, I can't excellent trading view here, so I'm just going to have to hit sell the close. Now, where does this stop go? Well, it's a little bit tricky. Measured move up from here is somewhere around there. This is kind of where we broke out. I thought this is where bears got trapped the day before. This is where we broke out. So let's put my stop somewhere up here. And I'm waiting for that sell signal. My sell signal gets triggered. Fantastic. I feel pretty good. I'm really underneath that bar, but that's okay. This just keeps happening. Every time I sell, I get an entry bar and then there's a buy signal. The last one triggered and got really good follow through. Now I've got another buy signal. Well, immediately I'm a bit disappointed. But hey, I'm an unlucky trader and my luck's about to turn around. So I'm going to stay in. So now we've just gone above the high of that bar. At this point, for me, I've now got, because I'm in at that line, right? I've now got 2 closes above my position. For me, it's time to get out above the high of that bar. Because I would only go short if I thought the next bars were going to go down, but it's not, it's going sideways. So now I got stopped out again. So you can see it's forming a graveyard for these unlucky traders. Now, what's the purpose of this drill? To go through all the bad trades and see what happens? Well, think about what I could do now if I'd taken 2 losses. I sold here and it failed. I sold again and it failed. So we always in short? Are we always in long? Well, if I've just taken 2 losses short in a row, I'm not going to sell a third time. I'm going to become a buyer. And I think a lot of traders bought here, or they bought a pullback into the range here. So that's a 50% pullback somewhere in this range. I think a lot of traders bought. So you can see many traders just bought the close. They instantly reversed. Others were waiting for a pullback. There's the pullback. And then a lot of traders were looking to buy one tick above that buy. Bang. So this was the switch from all the traders that lost down here. And that trade basically never came back. So what are the exercise steps? Well, step 1 is find a chart, select the worst trades. 2, either replay them in your mind, or if you've got software where you can replay them, practice replaying them and look at how you might manage your stop loss. Step 3, as you replay them, you can replay them more than once and look at when you should reverse your thinking. So for me, I explained before, here I took a loss short, there I took a lot short. I need to stop selling. End of selling, must look to buy. And what I said earlier was a lot of traders bought here. If you didn't buy there, you waited for a pullback. There's your buy signal after a pullback. Traders bought there. Boom. Other traders weren't convinced. And where did they buy? They bought here. They all became 3 layers of support that the market never came back to. And that's an example of looking to see where everyone's reversed. So the danger for a newer trader is continuing to sell all the way up. But it happens. So this is an exercise to help you get rid of that habit. I also have some bonus points below, which is look at the different kind of day type for intermediate traders that are interested in further development, and also look at a higher time frame chart. Here is a 15-minute chart, and you can see what happened. 15-minute traders had to take a loss or got out break even. Other 15-minute traders took a loss here, had to get out. Some tried to scale in, maybe they got out. But at some point in this region, both the 5-minute and 15-minute traders all agreed we were going high. And in hindsight, this is really annoying because you're like, I wish I could get that, develop that skill live trading. But if you practice this kind of drill, then you're practicing the kind of thinking you're going to need in a live environment when you add stress to it. And so therefore you're going to get better at going, okay, I took a loss there. I'm not going to sell again there. Okay, another sell failed. I need to get long. How can I get long? Well, thanks very much for listening. I hope that was a valuable video. What's my recommendation to practice this? In the beginning, I would do 10 to 20 charts a day for the first few weeks, maybe the first month. And then as part of your regular training, every time you come to the chart at the end of the day, this is just another exercise for you to practice. So thanks very much. If you've got any comments, please put them below. If you like the video, please hit like and subscribe and let me know what I should make next. Thanks very much.